Parthiban is asking that I'm 26-year-old, investing for the last 4 years in mutual funds and stock. Now I'm using stock advisors and selected 35 stocks of my portfolio for my portfolio. What is your take on stock portfolio size, as value research dashboard says more than 15 is not good? No, I don't agree with you. Value research dashboard says that one can be reasonably well diversified with at least 15 stocks, 10 to 15 stocks, and that is my general view. But having more, it actually works differently for different people. Many people are comfortable with having 30 stocks, and even 10 to 15 stocks, carefully chosen stocks in which you are interested in. 10 to 15 stock is also good from the point of view of investing in stock. You should be interested. You should be reading the periodic reports. Our analysts actually post all the big moves updates periodically. Whenever the stock prices go up in a hurry or go down in a hurry, they come back and tell you that is it really time to panic, or is it really time to get anxious, or time to sell if the price has gone up very rapidly. Those are the occasions when investors get really worried or get very greedy. If your stock, as it has happened in some of our recommendations, one stock actually went up by 80-90% in the last 3-4 months, and many investors are asking that should they get out of it? And I don't think so. Many of these companies are so good that getting out of them simply because they have gone up might be missing out on the big opportunity that lies ahead. Maybe the price may not go up, but these companies will become a substantially bigger company and support a much larger price, or can justify a much larger price a couple of years from now. So we are taking a view which is few years from now. Can this small company can become a very large company? And that is when you make a lot of money. And we are hoping that with stock advisor recommendations, we will have many stocks, or quite a few stocks, which will become substantially bigger, and it will translate into a big bonanza for you for a holding period of 5, 7, 8 years. And that is a view I would encourage you to have. Think like an owner. When you have bought these companies, think that you have become a part owner of these companies. Be interested about them. And you can't be as interested in 40 companies, but you can be reasonably interested in 15 companies, 10 companies, 12 companies. So look at your span of thinking, your ability to absorb things, remaining interested, and keeping track of things, because the more you understand, more you will be stick through the bad times, because even good companies will have bad times on the stock price. Good companies can also have an intermittent bad financial phase, and sticking through that phase is very crucial, because most investors, get out of it in a hurry. Unfortunately, we have the stock market which opens every day and goes up dramatically. Some of these great companies, they have a daily swing of 5-7%. So if you want to become a day trader with these long-term opinions, I don't think it's a good idea. Don't lose your sight for the forest. I would say that choose your set of good companies. 10 to 15 can also be good, and you can do it even if you have 40 stocks. Say 25 of them you can have nominal position. Gradually you can reduce those positions and emphasize 10-15 stocks in your portfolio. But even 40 is a decent, is not a very large portfolio, and if you are running it passively, it just might be superior diversification.